Let's take a look at the latest Ethereum Classic article on Brave New Coin. And as usual, all information is intended as educational and not trading advice. So the big question is always, who cares? It's Ethereum Classic. It's probably dead. It's probably never going to do anything against ETH. As you can see, Ethereum is dominating every single category pretty handedly. And one of the reasons why Ethereum Classic may emerge throughout 2020 is because of Ethereum's transition away from proof of work and towards proof of stake. Now, the Ethereum Classic devs have said they will never move towards proof of stake. So for some people, ETC is seen as a hedge against Ethereum's implosion if switching to proof of stake is not advantageous to the network. Another reason Ethereum Classic may rise up in 2020 is because of the current proposal called Progressive Proof of Work on Ethereum, which would effectively brick all of the ASICs used for the ETH hash algorithm and make them much less competitive against GPUs. Luckily, the ETH hash algorithm is also used by ETC, so you may see a flippening in the hash rate, for example. Big speculation on that. What isn't speculation is the Prog Proof of Work proposal is pretty popular within the Ethereum community and will likely be implemented sometime this year. What also will be implemented sometime this year on Ethereum is early stages of Ethereum 2.0, which includes some staking stuff, some proof of work stuff. So the third and last reason why Ethereum Classic may be rising in prominence this year is because it's having a 20% reduction in the block reward in the next few months, mid-March. So we'll see if that translates to anything on the chart. They did also recently have a hard fork, which brought them up to speed with the Ethereum development on the latest hard forks. So there's a lot of backwards compatibility now between Ethereum and Ethereum Classic. Looking at the chart specifically, I always like to look at the long-short ratio on Bitfinex, which is this top panel here, 5200 EMAs on the daily chart, and RSI. You can use any oscillator you like. I just like RSI. I mainly use it to find bullish or bearish divergences or spikes in RSI, dips in RSI, extremes historically. So just looking at price, we can see that it had a brief bullish period in Q2 2019, like most other alts did. And since then, it's kind of bled out. As we move into January, we're seeing a rise of ETC once again. And this bullish 5200 cross looks pretty good for the golden cross case coming up here in the next few weeks. Looking at the volume profile, you can see we're above the VPVR node of interest here. All of this volume interest that occurred from 375 to 475, 550. We're above all of that now for the most part, which says that there was a lot of resistance here, just as there will be a lot of resistance up here from 1250 to 17. So once we get above that volume resistance period, that is usually pretty bullish. Another thing I'm looking at is RSI continues to trend upward, certainly more bullish than bearish. If RSI is above 50, it's certainly more bullish than bearish. What we'll likely see is a higher high here in ETC price and a lower high in RSI eventually, which is known as a bearish divergence. It points to waning bullish momentum. Then you'll see a slight pullback and then a real decision as far as, is this a bull trend? Is it going to have continuation? You can see here we had a peak in RSI and then a higher high in price and a lower high in RSI. So that was definitely a bear div. And instead of reaccumulating and attempting more highs, continued bullish rallies, it just rolled over and flipped immediately after that to a bearish scenario. So that's what you don't want to see if you're bullish on ETC this year. Looking at the long-short ratios, historically, I don't really see any massive correlations here. Again, what I'm looking for is big spikes in OI, big spikes in open interest, one way or the other, sort of saying this is a crowded trade, this is ripe for a short squeeze or a long squeeze. You're not really seeing that. Longs have been basically at this level since April 2018. So to see anything massive happen now because longs are at this level, it doesn't really matter. The people who are long from April 2018 are essentially still long. So it's not really, they weren't long squeezed at all. So I think there's going to be a lot of selling interest at the 9s and 10s and 12s if it gets there, especially based on previous price action. Looking at a bearish pitchfork, as well as a key level historically around 10 bucks, you can see we're still in a bearish pitchfork. So what that means is the rate of change based on 3 anchor points, which are always extreme highs or lows in price, has dictated this median line, this yellow line, which is basically the mean for the trend. If it's pointing downward, it's bearish. If it's pointing upward, it's bullish. So it's currently pointing downward. And you can see that historically it's definitely wanted to continue to get back to this median line. It dipped below, went back, dipped above, went back, above, back, and it just sort of chilled here for a while. And now again, it's pointing to this extreme resistance diagonal, somewhere around 6 bucks, below 7.5 certainly. But if it gets above that diagonal, then you can say with certainty that, okay, maybe the bear trend is over here. It's finally breaking this bearish pitchfork. I don't think we'll really know if the bear trend is over until we break 10. 10 is a huge psychological level. It's a very important level for price. It's been support, brief support, and then immediate resistance. So it's definitely a big level there. And just looking at VPVR again, there is quite a bit of volume interest just above 10 bucks there. Switching gears to ETC BTC, this is one of the better looking altcoin charts currently. It's got a few things I really like. It's had a multi-year downtrend. You can see it's been below the cloud, below the 200-day EMA. Really very little price action above the 200, even going back to 2017. It's just had these brief periods where it's been above the cloud and or the 200 EMA. Really hasn't had a bullish 5200 cross, the green crossing the red line, since 2018, early 2018. So that's 500 days plus of down based on that alone. And recently, it's bottomed out. It's gone through this 6-month accumulation period, and it's finally back above the cloud. And it looks like it's here to stay. Not only that, but the cloud metrics are flipping bullish. A little bit hard to see, but the TK cross is bullish here. The cloud itself is bullish for the first time since a brief bullish period in 2018. What you want to see is the opposite of this bleed, right? You want to see green cloud, price above cloud. The same thing with the 5200 cross. That is likely to happen as long as price remains above the 200 here. It's also recently above the 200. And if you zoom in on the past month or so, it's had this bullish broadening wedge pattern that it's currently breaking up from. And then lastly, if you want to get mega bull on this, if you look at this accumulation period, it's very reminiscent of a bullish reversal pattern called the Adam and Eve. It's essentially a V followed by a longer U. And then, again, this is a 6-month pattern plus. Very bullish for accumulation as far as that's concerned in a vacuum. So the horizontal resistance would be around 70,000 sats, essentially where it pulled back from recently over the past week. If it can break that, trend metrics are pointing for a continued bullish rally throughout these early months of 2020.